Hey guys, welcome to another video. It's Manny from LiveFree here, and today I'm going to be sharing one of my favorite New York trading strategy. For the first 3.5 years of my trading career, I traded the New York session, but obviously it was not profitable because I did a lot of things that I shouldn't have done. And when I started to seek consistency in my trading performance, I realized that I had to also maintain a level of consistency in my trading performance and just my trading action overall. And today I'm going to be sharing some of the things that I did that really transformed what it was like when I first started trading the New York session and how I trade the New York session now. Just one way that I trade the New York session. Hope you find this video insightful. Let's get right into it. One of the very first things that I did that really made a huge difference in trading the New York session for me was coming into the market the same time every single day. Prior to this, 3.5 years into my trading journey, trading the New York session was something that I did, right? But my results were not consistent because my actions weren't consistent. And that's the thing for a lot of traders. You're looking for consistency, but your actions are inconsistent. So I would show up some days if I could at 7, some days if I could, I would show up at 8, I would show up at 8:30, or 8:20. I showed up at random times in the market. So I never really gave myself enough time to come into the market, to observe the market, to be an observer, to anticipate potential moves based on what price has been doing for the last hour or half hour. I would come in ideally before the 8:30 news, maybe come in 10 minutes before that. And what happened is I always became very reactive. And I know a lot of traders do the same too, which is why this was something that really made a huge difference for me, because I realized if consistency is what I am seeking, my actions have to follow through. I have to be consistent in my actions. So showing up at 7:30 became something that was important in my overall trading experience. So let's say you're coming into the market, right? This is gold, the New York session, right? 8:30. We know that we're likely going to be seeing some big moves before 8:30 or so, or by 8:39. Ideally, what you want to do is you want to come to the market right earlier. 7:30 is the New York Open, so that's kind of like pre-market before anything starts to pop. Some traders will come in a little bit earlier than that, but I find that 7:30 to me was just a perfect timing. So taking a look at this right here, this is 7:30. Right? You come into the market at 7:30. You're not even looking to trade. You're not looking to execute a trade. You are observing what is price doing. You're looking to say, okay, what is price doing for that day? So you can put yourself in a position where you can capture the move when it presents itself. You show up at 7:30. The next thing you want to do to put yourself in a winning position is to ensure that you have identified your key levels. This is something you can do the night before, or you can do, when you show up into the session, because you're coming in with some time to spare. So since we're taking a look at gold here, right, the first thing that we're going to do is we're going to go through the process of identifying the key levels. You want to find the areas of support, right, or resistance, right, areas that stand out, because what that's going to do is it's going to allow you to identify, okay, are buyers likely to come into the market, or are more sellers likely to come into the market based on specific objectives or based on the specific key levels that have been hit. So right now we see that based on this, the market has hit a pretty significant levels that we've had multiple taps in the past, and it's called for some pretty significant push to the upside. So we know that sellers were dominant up until price hit this 1940 level, right? And now we can likely anticipate potentially more buyers or more sellers to come into the market. So when you've identified your key levels, your next thing is to now observe the little market structures and say who is in control of the market, because when sellers are in control, they're targeting the lows, and when buyers are in control, they're targeting the highs. And based on what we can see here now, we know that buyers are currently in control, right? So the little detail tells us that, hey, price is currently making higher highs and higher lows, and we've taken out a market structure. So identifying the key levels, right? paying attention to the market structure and the concept of buyers and sellers. Another thing that I personally like to do when I am trading the New York session is paying attention to the London session, the London high and the London low, because the London session can give you the bias for the day. Right here, the London session usually starts at about 2 a.m. From 2 to 6, I am paying attention, looking for the highest point of the London session and looking for the lowest point of the London session. At 2:20, we formed the low, right? So we can call this the London low. Now what we're paying attention to is when did the highest point form in the London session? So about 4:40. So 4:40, we saw the London high form. So what this signifies is that the London session was bullish. So we've identified the key levels. We've identified the market structures and the little details. And the next thing that you want to do is you want to identify the London high and the London low, which we have, because that will give you your bias for the day. Just on the lower time frame, you're still using your daily time frame to see who is in control on the larger scale. The next step is to ask yourself, where is price likely going to be gravitating towards? Which area of liquidity is price likely going to be reaching for? So if we know that buyers are currently in control right now, we are moving in a bullish market structure, prices creating higher highs and higher lows, probability of price coming down here is not as high as price moving in this direction. And we also know that the London session was bullish. So based on that information, we now put ourselves in the position where we are anticipating price to continue its push to the upside. So because this strategy for me is more of a breakout strategy, I like to watch for momentum to shift. What you can do now, after you've identified the area of liquidity that price is likely going to be reaching for, which we have said is potentially this high right here. So we have the London low set, we have the London high set. We know that buyers are in control, so we want to be in line with the buyers. The next thing that you want to do now, after you've asked yourself, hey, which area is price going to be reaching for, is use your fibs. These are areas where you can start to pay attention to. You could even enter your trades here. But what I like to do here is I like to wait for the momentum to shift, because the market structure here is bullish, but the sub market structure within that is bearish, and I don't like to go against that. I like to personally wait. So one of the things that we're going to do is we watch to see how price is likely going to move. So the first thing that we can do is watch, just go through the motion here. We're watching, and that's why we're coming into the market early to watch, right? We show up at 7:30, right? We're not coming to trade. We're coming to observe. We're coming to get a feel for what price is doing. And as the market is moving, okay, wow, we can see that price here as taking out this area of liquidity, or is reaching for this area of liquidity. So which means that there is a shift in the current market structure right now, the sub market structure, that more buyers are likely going to be coming into the market. So right now, this high technically have been taken out. So that means that on a just by paying attention to that detail, there's a strong likelihood that we are going to continue in this direction. So let's see what the next candlestick does. Okay, so we're going to push the downside. Okay, perfect. So based on this information, we have seen a shift in momentum, right? You can enter based on candlesticks, or you can enter based on momentum. And for me, I like to enter with the shift in momentum. So by weighing my risk and taking a look at this and saying, you know, if I were to get involved right now at the close of this candlestick, I'm ideally looking for a maximum of 30 pips. Can I ideally place my stop loss at 30 pips and feel comfortable, right, with where price is currently at? Let's say with the spread, we get in right there. So at 30 pips right there, that's where we are in the trade. We've taken the trade, and you know, I like to scale out of my trades. So I give myself multiple areas where I like to take profit. So obviously we know that the 1.618 is also a great level, and we know that the 127 is a great level. Also, you can also take something at this high here, but based on your risk, you want to take a profit at an area where, you know, you're likely to get something half decent. So 34 pips would be a first scale out. So let's see what price does as we have this trade set in motion. Okay. Boom. So here you go. So we showed up at about 7:30. We're watching. We entered a trade as prices accumulating as the market broke above this level, right? And we know that based on the little details here, when price is targeting the highs, it means that more buyers are likely going to come into the market, right? Even though we didn't follow through, we pulled back, entered on the pullback, right? Because the momentum is also shifted. And at about 8:25 or so, we started to see price rally, taking out, this high. And then by 8:30, we saw pretty much two of our objective hit, right? Our third objective haven't been hit. So let's see what happens. So right there. So within about 15 minutes or so, or 25 minutes, we have essentially taken our entire trade has been completed. Profits have been made for the day. And the fascinating thing about this, guys, is that there was pretty much almost no drawdown on the trade. And this is one of the things that I really started to notice is why I don't always enter based on support and resistance or when price hits a specific level, right? I like to wait for a change. I like to observe. I like to wait to see what price is going to do. I like to be patient, right? Because when I am patient, right, and I pay attention to all the little detail, I know when to strike. It is like a predator watching, a herd of animals, and you're trying to pick the weakest ones. But if you come in and you just attack, you don't know who the strongest is. You don't know. So you're not putting yourself in a position where you're likely going to win. You're not putting yourself in the highest probability. This is one of the things that I personally like to do when it comes to the New York trading session. This is something that made a huge difference for my overall trading experience. And let's do a recap so it doesn't go over your head. The first thing is to show up consistently. If you want consistency in the market, your actions have to be consistent. The next thing is to identify your key levels and to identify the market structure and who is in control of, price action, right? Whose market are you coming into? Paying attention to the higher time frame and looking at the daily, looking at the 4-hour, making sure you're doing all of those things. But when you're coming into the lower time frame as a day trader, one of the things I like to do is take a look at the London session, the London high and the London low, because based on that, I know that price is likely going to be doing a very similar thing to what it did in the London session. And not all the time, guys. Sometimes, price won't follow what it did in the London session. But, for a large majority of the time, you will likely see that, hey, if the market London was bullish, the New York session tends to be bullish as well. And this is just something that you can test for yourself to gain a larger perspective. So once you've identified that, you want to map out your entry parameters and can use candlesticks at key levels, but this is a breakout strategy, right? So what you want to do is you want to wait for the shift in momentum, because even if buyers are in control, you're going to have sub-market structure, sub-bearish market structure, and price can continue moving all the way down. So I don't like to just enter based on the fact that we've hit a critical level. Not all the time. Sometimes I'll do it, but for the most part, I like to wait for the shift now to continue in the buyer side, right? Buyers to start targeting the highs. And when I get that, I start to get ready to execute my trade. So coming in prepared, being patient, and when the opportunity strikes, execute. When I started doing this, it made a huge difference in my overall trading, and it made a huge difference in trading the New York session because I started to anticipate more rather than be reactive. And that's the video, guys. Thanks for watching. Hope you found this video insightful. On your way out, don't forget to hit the like and subscribe button. If you have any questions, also feel free to leave a comment down below and we'll get to it. Once again, hope you guys are out there living free. I'll see you in the next video.